Markets end in the red amid volatility. Nifty firmly below 22,900 by close at 330. Mid-caps underperformed. Metals and healthcare clock gains, while real estate and PSU stocks lead losses.
A flurry of block deals on D Street today. Inox Wind, Timken India, PB Fintech and Concord Biotech see equity exchange hands as promoters and foreign investors cash in on the recent market rally.
Brokerages come out with diverse opinions on how many seats the BJP will eventually win on the 4th of June, but one common thread, all of them are pricing in a base case of an NDA majority. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know, to get you up to speed, to get you ready as we look forward to the next trading session. I'm Prashant, with me, my colleague Reema. Reema, hi.
Hi Prashant, interesting trading session. We'll talk more about it. But first, this is the show where we get you all the big news, the key developments in the Dalal Street, top corporate voices, the events to track. But first, the market action. It looked like it was going to be a slow day, a quiet, ranged kind of a session till the sell-off took place in the last hour.
I think, it's just readjustment, right? Because if you remember the first two phases of the polling when happened, there was a lot of nervousness, markets sold off. And then all these sound bites started coming about, why should there be any doubt? And the market recovered. And then, of course, we made a new all-time high. And now I think as we're getting closer and closer to the actual results, because we will only know when the numbers are out, you're kind of paring back a little bit, not to go into it with 23, with like a fresh, big all-time high kind of thing in mind. I think that's what's going on. Just a little bit of pruning of positions. We'll of course, the number will be the number, and exit polls on Saturday, the result on Tuesday. But I think for now, it's just sort of pulling back from what the market has done very, very quickly in the very recent past. So selling pressure late in the day picked up steam towards the close. In the last 1 hour, actually, PSUs under pressure. The PSU Bank Index down about 1.4%. Real estate as a bank was the top loser. Of course, I mean, these are some of the best performing sectors across the board. The real estate index was down about 2.4%, nearly 2.5%. And pharma, did well in pockets, in spades yesterday, and the index itself was up about 0.4% on a down day. So I thought is worth mentioning in that sense. Is there really a lot to take away from how stocks traded or how markets really behaved? If you're trading near term, I mean, price action levels, etc., would matter. But this is all of it, of course, in the sum total, in the larger view, is the market trying to price in and build in some amount of caution ahead of the actual results, the election results, which is, of course, going to be the big one. US markets, of course, were not trading yesterday. They will be trading, so we'll have that for company as well when we come back tomorrow. Reema.
But, all in all, the Nifty is only down 1% from the recent high or the all-time high, and the mid-cap index is down 1.5%. So even as some nervousness, jitters, caution may be creeping in, it's not that we've given up too much by way of levels. But for the day, it's an end below 22,900 on the Nifty. We ended virtually at the day's low, and the Nifty slipping 45 points, the Sensex down 220 points. Mid-cap, small caps underperformed. The mid-cap index was down 0.9% with a negative advanced decline ratio. Pharma was the only index managing to hold up in the green, up 0.5%. FMCG index was flat. But other than that, most of the other indices ended in the red, with the losses led by the PSU index. And in that, it's names like IREDA, you had a Hoodco, many of these PSU banks also under severe pressure, like an IOB, UCO Bank. So that was pretty much the day's trading action. We'll talk more about it. We'll get you the top buzzers. But here is what's lined up. As promised, the top movers and shakers of the day, Hormus is with us. It was also a day of block deals. We'll put the spotlight on Timken India, PB Fintech, and tell you, what happened to these stocks. And the other stocks which were on our radar were Laurus Laboratories, Sumitomo Chemicals in the back of the queue forward numbers. D Street chatter also on the show, and Nimesh will join in to tell us why prudent corporate advisory was buzzing today. And finally, the key market events to watch out for. But first up, let's get to the market action, the top movers of the day with Hormus. Hormus.
It's been a trend over the last 2 days, right? We've been quiet for most part of the session and then some bit of selling coming in the last 60 to 90 minutes. But the good bit is that we have not seen any capitulation from the higher levels, although there is some selling pressure. But today belonged to the block deals and a lot of them took place today. It's been a while since we said that, and all of these stocks, Timken India was the only one that saw positive reaction. That too cooled off significantly from the highs of the day, but still ended 3% higher. PB Fintech, Inox Wind was the worst performer here, 10%, a lower circuit for the stock after that block deal. Concord Biotech and Prudent Corp, which I'm sure Nimesh would talk about more as the show goes by. So all 5 block deals in focus. Now, as a trend, even every time when the broader markets have a bad day, real estate is the one that leads the downside, and that's what happened today as well. Brigade, Sobha, Phoenix Mills, almost all of them seeing losses of anywhere between 3 to 4%, and that profit booking trend was witnessed among the straight-on companies as well. The PSU seeing a bit of a sell-off in today's session. Bharat Dynamics, after a dream run that it has had in the last month or so, seeing some bit of profit booking there, 6% lower. SJVN, the PSU banks also got swept into it. IOB, UCO Bank, and HAL also having a not-so-good day at the office today. Earnings impacts that continue, the fag end of the earnings season, so plenty of companies coming out with results. Shalby came out with results today, ending at the lowest point of the day. Wrights also came out with results today, 3.5% lower. GMDC, Nalco had opened higher but then gave up all of the gains, as did NMDC, both of them ending 1.5% lower. But there were stocks on an otherwise red day. There were stocks that bucked the trend, and one of them was Glenmark. That continued to grow from strength to strength after yesterday's surge. A good market or bad, Exide continued its merry ways. DOMS Industries, after yesterday's surge, extending those gains. 3M India, the dividend announcement that they made just a few minutes ago of $680, that reflected on the stock price, 10% higher there. And lastly, Divi's Lab among the top gainers on the Nifty after its earnings and management commentary. Back to you.
All right, Hormuz, thanks very much for that. Although, I mean, overall, on the NSE, advanced decline was negative, almost 2.5 to 1. So in favor of declines today, more down than up. Jay Bala is with us of cashthechaos.com. Sudip Bandyopadhyay is also joining in of Inditrade Capital. Gentlemen, good afternoon. Good to have you here. Sudip, this is just the market trying to price in, or rather try to build in some caution, right, before the results. So I'm not sure how much to really take away from today's price action. How would you look at it? And for retail investors who are watching, what's the advice? I mean, I think one clear advice can be not to be leveraged, right? And of course, I mean, if you got a tip from someone you know and you made money, then maybe, and you don't know anything about the company, better to take profit. I mean, don't be too adventurous in that sense. Different from your core holdings or core portfolio. But your thoughts, Sudip?
Next Tuesday, when we speak at this time, the results would have been out by and large. So I think, after such a long election and uncertainty, we are heading towards that result day, and bit of caution and bit of volatility is par for the course. So I think that's what pretty much is happening. Also, we have to remember that market has been touching new all-time highs regularly, and the scope for error, margin of error at those kind of levels is very, very limited. So while there is the base case scenario, as the brokerages all around are saying, is the existing government coming back, the numbers which have been talked about quite widely also will sway the sentiment depending on actually what numbers come. And maybe next Tuesday, around this time, we would have seen and witnessed quite a lot of volatility based on how the numbers are panning out for the ruling party. Under the circumstances, bit of caution, and you're absolutely right. If somebody has got a tip and made some money on his share without bothering about the fundamentals, he should book profit and stay on the sidelines with cash ready to buy a good fund quality stock with great fundamentals when that dip, if at all that dip comes. Also, I would say for the retail investors, if they're looking at a time horizon of, let's say, 1 year kind of, then there is nothing to worry. This volatility is bound to happen and is happening. So they should look beyond this volatility, and the growth potential of India and Indian companies continues to remain strong. So there is absolutely nothing to get unduly perturbed about this volatility the next 10 days.
Jay, afternoon. How does today's last hour fall, the mid-cap weakness, position us for tomorrow's trading session? And are there any stocks that look interesting to you for the near term?
Yeah, as far as the last hour fall goes, it seems to be a repetition of the theme for 2024, where markets clock fresh 52-week high, fresh all-time high, and then they didn't see a follow-through. So, the markets are just not fallen back into the previous range. Other than that, I don't see any new price action. the markets have stayed within the 4% range from the start of the year, and it's falling back to the previous range. So what looks interesting in the very short term are relatively new listed stocks like DOMS and Nuvama Wealth, but the risk reward is not so attractive there. But I like two names there: Sumitomo Chemicals and Max Financials. Sumitomo Chemicals with a stop loss at 410 and Max Financial with a stop loss of 913. I expect both to hit fresh 52-week highs.
On Nifty, Jay, where are supports? I mean, do you have a view near term, very near term?
Yeah. I think it's a bit ambivalent there, but nearest supports are about 22,450. But if the markets were to print 22,790, a print is enough. 22,790, that's negative for the markets. But critical supports have not been broken. But whatever happens post results, I think the upsides are very limited, and the market could sell on good news or could sell on bad news. The direction is going to be more or less the same. It's the depth that's going to vary, and the upsides. The markets have priced in the best of what the market, the results would come out with. So, given that, I anticipate either a spike and then a drop, or just a straight drop. So, you need to start taking profits on the counters that you've made reasonable and decent profits.
Okay, all right. By the way, blocks are coming in thick and fast, right? Every day now. And today we had a few. So Timken India, stock ended 3% higher. It was up about 5-6% at one point. So with the market, it came off a little bit. And then, of course, PB Fintech, which was down 5%. So Vivek is here to summarize both these for us. Vivek.
Well, that's right. So today you saw two large block deals, both of which we highlighted, pre-market open itself. The first one, of course, was PB Fintech. We understand from our sources that Tencent Cloud Europe sold 1.2% stake in the company. Remember, they held 6.26% stake, so they continue to hold a little over 5% stake after today's block deal as well. And this is something that continues to remain as an overhang as far as PB Fintech is concerned. It was a 5.5% discount to yesterday's closing price. That's where the actual deal took place, and the stock also closed lower by almost 4%. The size of the block, a little over $78 million. But the more interesting one, of course, was Timken India. The parent, Timken Singapore, remember in June of 2023, they had actually sold a 10% stake in the company, bringing down their shareholding to 57%. Now today, what they did is they've gone ahead and sold another 6.6%. And currently their holding stands at a little over 51%, continuing to hold a simple majority. This particular stake that was being held by the parent was being seen as a bit of an overhang, given the fact that the parent had indicated that they intend to pare down the stake in order to go for capital allocation plans of both in Singapore as well as for a buyback program that they intended to contend. Now, what's actually happened today is that a 1,775 crore block deal took place. A 10% discount is what they were offering to the buyers, but there was strong demand, and we understand that the demand over here was quite strong. And after which, post this dip as far as the block deal was concerned, the stock ended higher quite sharply, cooling off a little bit in the last hour.
Okay, now there is a 180-day lock-in for the promoters also. Vivek, thank you very much for that. Let's talk about Loris Laboratories, Ganesha Ecosphere and Astra Microwave. All these three companies reported the Q4 numbers. We chatted with the managements of all these three companies earlier today, and we got some positive commentary. Upasana is joining in and gives us a roundup of the key management comments. Upasana.
First up is Ganesha Ecosphere. The company reported a mixed set of numbers in its Q4 FY24. The revenue remained flat, but margins expanded sharply by almost 420 basis points on a YoY basis. Well, management joined us earlier this morning, and the commentary remains quite upbeat. The management expects 50 to 60% growth in top line and bottom line in FY25, and it's looking at a blended margin of 15 to 16% in FY25. The company has also highlighted that it is looking at a revenue growth of 25 to 30% CAGR over the next 3 to 5 years. And it has also said that the new business will contribute approximately 50% to the top line in FY25. Next up is Astra Microwave Products. The overall company reported a good performance in Q4 FY25 with a revenue growth as high as 37% on a YoY basis. The management commentary remains positive, and it says that it will see positive PBT margins in excess of 17%. The company would continue to maintain revenue contribution from space at 14%, that is at the current level even in FY25. The company is defocusing on exports and focusing on high margin business. Hence, the export will likely be less than 15% of the business going forward, is what the company has highlighted. Lastly, Laurus Labs also joined us today morning, and the company has shared the outlook with a 20% plus margins in FY25. The margins will improve as the revenue would rise. It says that it also further aims to reduce the debt in FY25.
Okay, well, Laurus is a bit of a turnaround candidate. Let's see if it happens or not. It's not worked out, but the management today essentially telling us they'd like to do it and then say it, not putting a revenue growth guidance. The other two are also interesting, as Upasana highlighted. Upasana, thanks very much for that to bring us. And of course, the strongest coming from Ganesha Ecosphere. Sumitomo Chemicals is the other one I want to talk about. Their shares were up close to 2%. It was up about 5% earlier in the day. Their revenue and operational performance came in stronger than expectations. Vamakshi is here with a very quick snapshot. Vamakshi.
Well, absolutely a strong set of numbers coming in from the company in a relatively weak macro environment. When we look at the revenues, they're up almost 3% YOY, and in fact, they've come in nearly 4% higher than what the street was expecting. EBITDA has come in nearly 39% higher, and net profit has come in nearly 37% higher as compared to expectations. The standout this time around is the gross margins, which have improved by almost over 1,000 basis points, and this improvement is largely being driven by procurement efficiencies, optimum pricing strategy, as well as cost control measures on the fixed direct overheads. The net working capitals have also improved. As a result, we're seeing a sharp jump as far as the gross margins are concerned. The company has also announced capex plans. They will be buying 2 additional land parcels. A transfer process is expected to be completed soon. And in fact, a regular capex of anywhere between 70 to 75 crores per annum is what they see. But they will also be spending an additional capex of almost 120 crores over the next 2 years for 5 products. The revenue potential for these 5 products is expected to be somewhere around 200 to 250 crores per annum. So overall, good set of numbers coming in from the company, and they also said that the short-term challenges are expected to improve further going ahead, and as a result, the stock was trading higher today.
Thank you very much for that. Sudip, coming on Sumitomo Chemicals, Jay was telling us technically the stock looks good, but Q4 numbers for this company looks good, and it's come after a challenging year for the entire sector. Do you think there is a turnaround in sight?
Absolutely. In fact, my view is contrary to the general belief. I believe that there is a turnaround coming in the overall chemicals and specialty chemicals sector. It's maybe 1 or 2 quarters away. It's very difficult to predict, when the entire sector will pick up. But some companies have started initial signs of recovery. Sumitomo Chemicals is definitely one of them. I think this quarter performance has been good, and the confidence of the management is apparent from the fact that they are getting into expansion mode. I believe that I think this sector continues to have a significant potential for exports, and plugging into that China plus one. That's the direction the industry was going in. In between, the challenges came, and last about 6-7 quarters they have been down in the dumps. But now time is coming for recovery.
Okay, coming for recovery. We'll of course see how this one goes. Jay, out of the names mentioned, anything you like? I mean, I think you do have a call on Sumitomo, which we discussed earlier, but anything else?
Yeah, both Timken and Astra Micro, they still have short-term upsides pending. But Astra Micro could pull back in the medium term, but it's very strong in the long-term price trajectory. Timken, although it's just it's got short-term higher highs to come through, but it could be a medium to long-term top. So if Timken stretches past 4,200, you might want to start looking at booking profits over there.
All right. Thanks very much, both of you, Sudip and Jay. Great conversation as always, and thanks for staying on. We'll head to, as we head to the last phase of the Lok Sabha elections, several brokerage houses are coming up with their take, essentially, on what the election outcome could be based on, of course, various surveys, sound bites, whatever you have it. And, of course, more importantly, what they make of the market based on this or that. Hormuz has kind of compiled this for us. He's standing by. Hormuz.
The general consensus right now among all the brokerages is that the NDA will return to power with a majority. And another talk that has been on over the last 6 phases of the Lok Sabha polls, with one more to go, is the dwindling voter turnout. Now, most of these brokerages have said that this low voter turnout is not an issue of concern, and IIFL Securities is also echoing the same, although it says that it may not indicate a wave for the incumbent, but it is not a factor to worry about. Now, it says that the voter decline itself will not change the election outcome, because India has never seen 3 successive elections of increasing voter turnout since 1967. And what they also say is that the rise in women voters in the last 2 elections will structurally benefit the BJP, and now they are hoping for a modest increase in rise of seats that the BJP will win in 2024 compared to 2019. They are penciling in a 320 seat projection for the BJP this time around, compared to 303 that they had won in 2019. Now, JM Financial has come out with a bull case, bear case and a base case scenario for how many seats the BJP would win. The bull case is a 310 seat projection, the base case is 299 and a bear case is 290, and all of them still point to a majority for the BJP. Now, policy continuity, they say, will benefit stocks like defense and capital goods, and they are also finding valuation comfort in private banks and in the consumption space as well. Now, what their strategy for the market is, they are advising to buy the dip. The VIX, according to them, has topped out for the current cycle, and they are preferring large caps over small and mid caps, considering the valuation comfort that they offer. And now, after the election, they are hoping that the focus will shift to the budget that will be presented in the month of July. And lastly, Phillip Capital, their assessment is that their bull case scenario is projecting a 325 seats for the BJP, 290 to 300 in the base case, but their bear case is projecting a no majority for the BJP, but a coalition NDA government at the center. Now, among their stock picks, if you look at the 1 year time frame, it's a PSU heavy stock pick list: SBI, Bank of Baroda, REC, PFC. When you go to a 2 to 3 year time frame, you would see a lot of large cap financials in there: HDFC Bank, ICICI, Bajaj Finance, and some pharma names in there as well. So all eyes now on the 4th of June, but the exit polls will be a big trigger as well. Back to you.
Okay, thank you very much for that. Let's get in a quick check on the top corporate voices we had today. LIC in the spotlight following its Q4 performance. The management expects a double-digit APE growth exceeding 15% for FY25. They also target a VNB growth of about 19%, with margins to reach 19 to 20%. The management also says they may enter the health insurance and go in for an acquisition in this segment if composite licenses are approved.
Well, PI Industries management was also with us, so we don't sort of see them talking too often, but they did speak with us today. The basic message seems to be that overstocking, agri-chemical overstocking in the industry as an issue should end within the next 1 year. They're targeting revenue growth in FY25 of 15%, which is lower than what the market was expecting. Margins, though, will remain steady around the 26% level, which was the margin for FY24 as well. They also added that despite concerns around their largest product getting generic competition and hence price erosion, they're pretty confident about growth there.
Last but not the least, Laurus Laboratories surged in trade. The management has guided for EBITDA margins to exceed 20% and a strong revenue growth for FY25. The company is also talking to large MNC players for supplying API orders, and they expect it to be a multi-million-dollar opportunity per year. Get into a break on that note. On the other side, our segment D Street Chatter and the top market events to watch out for. Welcome back. Let's get to D Street chatter. Nimesh is now joining in. Nimesh, hi.
Hi, Rima. So, the mid-cap index was down 1%. The cash stocks were under pressure, and there were 5 large block deals worth 4,100 crores. So that sums up today's market. But here's the list of D Street chatter. The first name is Prudent Corp. That stock was under pressure today after a large block deal. Nearly 7% equity got changed hands. I understand it was a clean-out trade from a private equity investor, and some existing holders were buyers in today's block deal. The second name is IRB Infra. While the stock has been consolidating after an inline quarter 4, expect a large block deal in IRB Infra very soon. I understand a large FI investor is going to be a likely seller in that block deal. The third name is United Spirits. While the stock was buzzing in trade today, largely on back of very strong buy flows, so looks like some FI interest is back in United Spirits. And the last is Ratnamani Metals and Sri Divija Cement. Both saw small buying interest from larger FIs, and that's the reason why they relatively outperform their broader market weakness today.
All right. Nimesh, thanks very much for that. So it's a season of blocks once again, lots of them coming through. Thanks for that. Well, what to watch out for as we come back tomorrow is the question. Vamakshi is standing by with that list. Vamakshi.
Well, absolutely. We're towards the end of the earnings season, but still a couple of important names are expected to report their numbers. We have the likes of Tata Steel, Bada, Ipca, Emami, as well as Alkem, Cummins, as well as Samvardhana Motherson and Masgao Dock reporting their numbers in the trading session today. SpiceJet will be another counter that we will be watching out for, and that is because the Delhi HC had allowed the company earlier to a time till 29th of May to confirm the settlement with French engine lessors over unpaid dues. So on the back of that, we will be watching out for this counter. But apart from that, on the global front, former Meta CEO Sheryl Sandberg will be stepping down from the Meta board of directors, and IMF first deputy managing director Geeta Gopinath will be at a press conference at the end of her visit to China for Article 4 consultation mission.
Thank you. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.